And Franz, we've got to use it just for the purposes of today. I'm sorry, but, you know, the markets didn't like it either.
The mid-year update was pretty horrible. In fact, in the morning we saw a pretty good start for the Australian share market. I just have the intraday graph behind me, and you can see where it all started to go pear-shaped. It was once we did see that update coming through. In particular, if we have a look at the sectors which were affected, we saw the energy sector being sold off, the material sector being sold off, and the banks being sold off after that update. But we did see a move into defensives. We saw telecom as well as consumer staples doing more, and I guess that's a reflection of an expectation around a softer economy that we saw investors moving into some of the more defensive areas of the market. If we have a look at the currency, at 1 p.m. we saw the Aussie dollar at 89.5. We're currently seeing it at 89.4, so a slight decline. And of course, we're watching the ratings agencies as well. One of the comments that Moody's came out with was that the budget deficit is clearly credit negative, but we are going to see the ratings agency remaining on hold until they see the policy moves in the May budget update. We have a look at some of the prior years and some of the things that we had been watching out for. In FY12, it was all about the MRRT, the mining tax, small business tax being driven down, as well as a diesel rebate. Last financial year it was about spending on infrastructure. It was also about some changes to superannuation, especially the concessional cap that the cap changes that we saw. And of course, it looks like this financial year we're going to be concentrating on spending cuts and potentially higher taxes as well. So we'll have to watch that May update, but for the time being, that mid-year update, the MYEFO has been a negative one for the markets.
Cash and scrip. Julia, what do you hear on that score?
It does look like they'll have an option, so either shares, so 0.19191 APA shares, or a combination of cash and scrip. So that's a nice change for investor shares, because of course the initial offer was just a scrip offer, and in August that was actually rejected by Investra. But if we have a look at both of these companies have issued a profit upgrade in the last week, so that's nice to see. And they're both involved in the domestic gas market, and the outlook for that market is looking very strong in 2014 and onwards. Both are in gas infrastructure, so this merger does make a lot of sense, and I think this one will go through. So we were expecting to see a Sweden bid coming through from APA. We have seen it before Christmas, so that's a positive there, and the option of either taking shares or a combination of cash and scrip for investor shareholders, I think a positive development as well.
Mike, any views?
If we have a look at Greg Ellis, who's been the CEO since 2008, and since 2008 when he's been at the helm, the share price has managed an increase of 700%, so it's been a massive rise. And I think shareholders are nervous because not only have we seen the CEO resign today, but a few weeks ago we also saw the CFO, Jenny McDonald, resigning. So you've seen two top positions at REA Group now disappearing. We're going to have to see a replacement, and that could signal that we could see some change in terms of strategy. So a pretty significant risk there. If we have a look at REA Group, I guess the jewel in their crown is that they own 70% of the $1 billion real estate classified market here in Australia. You're absolutely right. Italy growth, that's going to be a major risk, but the fact that they've lost two key management positions over the last 3 weeks now, I guess making shareholders a bit nervous.